Welcome back, beautiful people. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I'm your host, Zen Sams. Now, coming up in our innovation and tech segment brought to us by Caldwell Soames, we are going to be chatting fintech, crypto, and tokenization. We have returning contributor Paul Caldwell, chairman and CEO of Caldwell Soames, joined by Dan Raykham, CEO of Fungible Network. Now, Fungible Network is a tokenization platform for real world assets. Dan has a knack for building and selling fintech startups, and Fungible Network is a platform that allows for secure and transparent tokenization of liquid assets, and they also provide third-party custody and audit services for the safe storage of those underlying assets. Now, as Paul and Dan get settled into the broadcast room, let's recap digital transformation. Now, digital transformation has been introducing profound improvements across various sectors, especially in the case of digital payments. However, the growth of payment technology has also created noticeable threats for sensitive consumer data. And as our data passes through various points when making digital payments, it becomes vulnerable. Therefore, tokenization blockchain combination is very much accepted as a reliable approach for isolation of data in this very ecosystem. This is where you pay attention. This application of tokens has increased in the payments processing industry for storing credit card information without exposing the original data, keeping your details safe. There you have it. In addition, the use of tokenization in blockchain has been making news for prospects of converting tangible and intangible assets into digital tokens. So what does the new age of tokens mean for the future of blockchain? Well, blockchain and tokenization of assets aren't for every industry. However, several sectors like cannabis, fintech, and cloud computing are really embracing these transactions that allow for essentially better proof of ownership. The reason is that tokens are more secure than other options. Now, you might confuse tokens with cryptocurrency, but note that tokens are used for investment purposes to store value or to make purchases. Cryptocurrencies are digital currencies used to facilitate transactions such as making and receiving payments along the blockchain. For example, altcoins and crypto tokens are types of cryptocurrencies with very different functions. The tokens represent real world items using blockchain technology, and they're transferable once these are in the blockchain, just like cryptocurrency. Okay, this is a lot of complicated stuff. Here to break it all down for us and what this means for the regular people are experts Dan and Paul in our innovation and tech segment. Welcome to the show, gentlemen.
Thanks, Dan.
Thank you very much, Dan.
Paul, I'm going to start with you. In recent headliner, Visa is launching new consulting and advisory services to advise its clients on crypto. The payment giant is now enabling a crypto advisory practice, and it's going to offer basically advice to financial institutions, retailers, and all kinds of other firms to help them better understand the crypto ecosystem. Now, while the move doesn't directly affect consumers, this is further evidence that cryptocurrency is gaining more mainstream adoption within corporate America, which generally has a positive influence on the value of investors' crypto holdings. What do you say to this?
Generally, I think it's good, Zen, when anyone can educate anyone in a proper way about cryptocurrency or fungibility or non-fungibility, tokenization, because at the end of it, there are very large companies involved in the transaction workflows, no matter what, when you start talking about payments. And when you start talking about payment structures and you start talking about things like merchant services, companies like, for example, Fiserv, as an example, its acquisition of First Data put Fiserv in a whole nother place. The interesting thing about that is whenever you go look at a Clover machine at a restaurant or wherever, and you're going to pay with a credit card, they are in the middle of that transaction. So they make some money from that merchant, let's say 3% or whatever. Visa, MasterCard, the credit cards that you use to swipe when you pay that, if you pay with a crypto card, a crypto only credit card, let's say a crypto Visa, these are becoming more and more troublesome in the middleware, in the middle of the transactions, because while it makes sense at Visa and it makes sense for the consumer to have that crypto card, the middle layer, these billion-dollar corporations that have to service that merchant's transaction, merchant services companies like Fiserv, they have to consider other things. For example, what happens if you buy something with Bitcoin, you buy your shoes with a Bitcoin Visa, but then you go return those shoes? What happens? How do you get paid back? What's the liquidity? How does that work? It's not just as easy as if A, then B, then C. There really is a lot that happens there. And these companies, these big companies in the middle of the transaction, do not want to eat that cost because they have to service that refund to that consumer. That retailer has to process that refund to that consumer. But someone at the end of the day has to settle that refund and pull that money back. And if that's in cryptocurrencies and there's been a huge swing in the value of that particular coin, let's say Bitcoin, this month even, but someone has 30 days or whatever to return something, it gets very interesting in the middle. So I've been sitting on some forums, some CEO forums that have been talking about this with some of these larger organizations. I find it very interesting. I think it's going to break free, but I think generally speaking, the more education, the better.
Absolutely. There's beauty and power in simple concepts like replacing sensitive data with tokens to make digital payments more secure. But they're scratching beneath the surface, and powerful technologies are enabling tokens to do so much more than just reduce payment fraud. Dad, blockchain has transformed the ways in which we invest in assets, and tokenization is the answer. It's the process of transforming ownership rights of an asset into a digital token. For example, you can transform an apartment worth $200,000 into a total of 200,000 tokens, with each token amounting to almost 0.00005% of the apartment's value, so to speak. So basically, blockchain tokens provide a digital representation of complete or shared ownership for any entity having specific value. Walk us through some of the different types of assets that you can convert to tokens.
Well, the simplest form of tokenization is tokenizing equity in the company. And there are a number of companies doing this already. You can issue equities under Reg D or Reg A and give the tokens to the equity investors. Now they have investment in the private company, but that investment is a lot more liquid as what you would have in the past. So that's number one. Real estate is also a very interesting area. As you suggested, people can buy a fraction of an apartment, or I can tokenize an apartment. It could be a rentable property, and now you have a token that can generate yield to the investors. So these are very kind of simple ideas. Also, you can tokenize commodity like gold. People can buy gold in a tokenized form as well.
Interesting. Very interesting. I read an article that our good friend Paul sent me that you wrote way back before all the NFTs kind of were all the rage, and these non-fungible assets are the ones that couldn't be broken into small pieces. So tokenization helps in breaking down non-fungible assets into digital shares, which you can trade either fully or in a limited way. But it's interesting that you made that parallel and analogy in an article that was basically published in 2018. So I was quite impressed, Dan. Paul, access to banking, and this is kind of going to tie back into what you started saying earlier. Access to banking is an immense problem for several e-commerce companies. Regulation and monopolies can prevent easy access to finance for small startups. And blockchain technology is helping solve the sector's problems by allowing them to bypass traditional banking and speed up transactions without compromising security, bringing me to OGPay. OGPay is one of those platforms. Walk us through the differences of the traditional payment platform versus the hybrid ones that also incorporate blockchain and crypto like OGPay.
A simple example, Zen, OGPay is a great example of that as far as decentralized finance and fintech being married to interoperable layers with traditional types of banking and being able to operate these things being able to operate together. For example, if you lose your Visa card today that's tied to your checking account at your traditional bank, someone can go swipe the card, press credit, and buy a bunch of stuff. And of course, you'll get your money back. I mean, it's security. It's secure. You'll be fine. It's fraud and all that. And you'll get your money back. But you have to go through the hassle and so forth. OGPay is Visa card, debit Visa card, virtual and physical card, are not directly tied to the same checking account, the same account that is tied to your mobile wallet, but they have an interoperability that allows you to move money instantly from your mobile wallet to your debit card anytime you want to buy something with that debit card, and then simply pay for it. If you were to lose your physical OGPay Visa card, you can simply turn it off immediately. And there's no reason to keep money on it because it interoperates with a mobile wallet and the money just moves on and off the card as it's needed. So it's not, no one's able to press credit or able to defraud at that level. So there's this multi-factor authentication technology that's built in there that prevents this type of fraud. So it's kind of like a financial firewall, if you will. If you were talking about technology firewalls, it's like a financial firewall that you can get as a benefit of all of that. And then with cryptocurrencies on OGPay, the buying, the selling, and the sending and receiving, everything is KYC'd, AML'd, and KYT'd, but at the transactional layer. So I believe it's that type of direction going forward that the companies that really prevail in the space will really matter. And then with Dan, we acquired Dan's business this past year and into our private enterprise portfolio. And I'll tell you, talk about education. Dan has been a wealth of knowledge and education for us here as well.
Let's go back to Dan because we have about 2.5 minutes left. Dan, I'm going to kind of touch on security here. So the greatest amount of pressure now being applied to banks by regulators is for card not present, CNP fraud. That's essentially online transactions made with a stolen credit card and scheme debit card, right. Visa, MasterCard. As attacks and these fraudsters increase their sophistication and continue to target consumers, there has to be another way to fight credit card fraud. Now, blockchain can be used to help credit cards retain their authenticity in a global market. Walk us through some of the scenarios in where blockchain tokenization can help prevent, say, credit card fraud in about less than 1.5 minutes.
Yeah, I will just continue saying what Paul was saying. Effectively, the credit card or debit card, in case of OGPay, has no value stored on it. The value is stored in your mobile wallet, and mobile wallet is protected by the blockchain's technology. Security is built into the blockchain. So every time I swipe my card, we transfer whatever the minimum amount has to be transferred to the card to satisfy that transaction.
But that's on OGPay. But how would Visa or MasterCard or these bigger companies incorporate this if they don't have a hybrid platform like OGPay has?
That's a good point. What they can do, I guess, so one of the things with the blockchain, all transactions are on the blockchain and you can always audit every single transaction. If somebody loses the card and the card has the, can I swipe that card? I think as long as you have a physical card and you're relying on that card, there are still issues with the security. I think Visa and MasterCard, what they're looking at in terms of the blockchain, they're looking at minimizing the transaction cost and giving their merchant, their customers, ability to do the transactions at a fraction of the cost.
Got it. Yeah. So basically what you're saying is that, to put it simply, when a consumer wants to make a transaction with their card and uses a tokenized payment system, the system encrypts the information on the card, confirms it, and sends it out to the seller. The information is then encrypted thanks to the blockchain system that is continuously storing information and encrypting it like over and over again to prevent intrusion, which makes total sense. And now we are out of time, my friends, but I would love to pick up this conversation. Paul, of course, I'm going to see you on our next Innovation in Tech. Thank you for joining the show, gentlemen.
See you, Zen. Thanks. Take care.
Bye-bye.
You got it. That was Paul Caldwell and Dan Raykham. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. We'll be right back after this.